The corporate landscape in Indonesia has long been marred by issues such as corruption, monopolies, and the reliance on debt-fueled growth. Despite these challenges, certain companies have risen from obscurity to achieve dominance in their respective sectors over the years. What is evident about the Indonesian corporate sector is that it continues to thrive, with historical data indicating consistent profitability and market value growth from the past to the present day. Although the Indonesian corporate sector has undergone numerous growth cycles, it has also seen its share of failures, with bankruptcies being a common occurrence, particularly in cases where mismanagement, criticism, and controversies are prevalent. One example of this is the Asia Pulp and Paper, which is widely recognized as Indonesia's biggest corporate bankruptcy. During its heyday, Asia Pulp and Paper held a dominant position in the Indonesian market for pulp processing and paper and board production. According to official reports, the company had a combined production capacity of around 3.8 million tons per annum, which accounted for roughly half of Indonesia's total paper and board capacity. Additionally, Asia Pulp and Paper owned two of the largest pulp mills in the country, Indonesia and Lontar Papyrus. The company's reach extended far beyond Indonesia, as it was the largest producer of paper and board products in Asia, excluding Japan. As a major player in the industry, it held significant sway in China, where demand for paper and board products was rapidly increasing. Despite its impressive achievements, including a listing on the New York Stock Exchange, Asia Pulp and Paper encountered a significant corporate problem that ultimately led to its downfall. The company defaulted on loans exceeding $13.9 billion during the Asian financial crisis in 1997, which was noted as the largest debt default in the history of Asian markets. As a result, the once reigning champion of the pulp and paper industry in Asia was forced to crumble under the weight of its massive debt burden and struggled to recover from the setback. Asia Pulp and Paper may not be a household name for many, and few would have anticipated that Indonesia would be home to the largest defaults in Asia. Nonetheless, the company's significant default occurred. So, who exactly is this Indonesian company, and who are its owners? Furthermore, is the debt issue solely the responsibility of the company? Asia Pulp and Paper was established by two Indonesian businessmen, one of whom was the renowned Chinese-Indonesian billionaire Eka Cipta Wijaya. He founded Sinarmas, a significant private corporation in Indonesia. Asia Pulp and Paper was formally incorporated in Singapore in 1994, but its history dates back to 1972 when it was founded by Taiwanese investors. It was not until 1976 that Sinarmas acquired a 67% stake in the Indonesia company, marking the beginning of Asia Pulp and Paper's story. The formal establishment of Asia Pulp and Paper in 1994 followed Sinarmas's consolidation of its pulp and paper operations by combining its ownership in Indonesia company and its business partner Jui Kimia. As a result, even before its official establishment in 1994, the company was already a significant and formidable player in Asia's pulp and paper industry. However, due to its aggressive corporate behavior, the company had a fragmented leadership structure in the mid to late 1990s. Around 1996 and 1997, Asia Pulp and Paper made massive capital investments totaling $4.7 billion, and by 1999, its total paper and packaging production exceeded 4 million metric tons per year. The company had facilities throughout Indonesia, but its massive facilities in China were particularly noteworthy. It entered China in the late 1990s, spurred by the rapidly growing demand for paper and board products in the country. Its production facilities in China alone produced over 1.2 million tons of paper products, and before its final collapse, it had plans to construct a pulp mill with a capacity of over 600,000 tons per year in Hainan province. The company was large, led by aggressive individuals with a desire for growth, but this approach was ultimately unsustainable due to its reliance on debt. To accelerate its expansion, the company relied heavily on borrowing, taking on over $13 billion of debt from international debt markets, including capital bonds and loans from offshore investment banks. As has been demonstrated in corporate history, international debt can be a more difficult burden for companies to bear than borrowing from local banks. Despite the risks involved, debt remains a popular means of financing growth for many corporate managers. This strategy has been instrumental in the formation of many successful companies and even countries. However, excessive debt can lead to significant problems, particularly during times of financial crises. This was the case when Asia and Indonesia were hit by the biggest financial crisis in their history. The Asian financial crisis, which began in 1997 following the flotation of the Thai baht, caused numerous global and multinational corporations across South Korea and Thailand to declare bankruptcy. This was mainly due to their excessive debt burdens, including loans from international leaders. As interest rates soared, even prominent South Korean conglomerate Daewoo collapsed under the strain of the crisis. During the 1997 Asian financial crisis, Asia Pulp Paper managed to stabilize its business operations and accounting. Despite having $7.1 billion in outstanding obligations, the company remained protected. Its parent company, Sinarmas, implemented a strategy to safeguard its core assets. Between 1998 and 2000, Sinarmas took on more than $4 billion in fresh debt, some of which had high interest rates and short terms. Much of this new debt was used to fund Asia Pulp Paper's expansion in China. As time passed, it became apparent that Asia Pulp Paper's business and approach were unsustainable. During the early 2000s, the company's financial situation drastically deteriorated due to long-term obligations coming due and significant short-term debt. In September 2000, the company applied to the United States Securities and Exchange Commission to modify the terms of roughly $2 billion in bonds. The company's share price finished the year at $0.54 per share, losing 96% of its value over the course of 12 months by December 2000. 1 month after the company's share price plummeted, the New York Stock Exchange warned Asia Pulp Paper that it was in danger of being delisted. The company faced a series of challenges in the following months, signaling the start of its uphill battle. In February 2001, its Indonesian subsidiary missed a coupon payment. The company then asked banks to reschedule debts and arrange asset sales in March. During the same month, its Chinese subsidiary also missed payments, leading the company to suspend all debt repayments. The decline of Asia Pulp Paper had not only affected the company itself, but also the banks that had provided it with billions of dollars in loans. The company had incurred a debt of approximately $3.6 billion in China, of which $1.8 billion were owed to state-owned banks. While the Asian financial crisis and the company's strategy of aggressive growth through debt were contributing factors to its decline, there were other reasons as well. The decline in pulp and paper prices was the primary reason for the company's difficulties. The sudden and unexpected drop had a significant impact on the company's strategy, which had been built around the assumption that prices would continue to rise. Despite this setback, the company remained a major player in the industry, operating 5 of their top 10 paper mills in Indonesia as of 2010. Its operations in Indonesia and China produced 13 million tons and 6.4 million tons of paper per year, respectively. As of today, the company is still in operation and claims to market its products to over 150 countries as mentioned on its website. The company's revenue has continued to grow, and its total liabilities have decreased according to its balance sheet. However, its Chinese subsidiary was eventually separated through a debt of equity swap, and the company has committed to repaying its $7 billion debt over the next decade, including debts of its Indonesian subsidiaries. One of the valuable lessons to be learned from the Asia Pulp Paper saga is that greed can lead to corporate failure, especially during unexpected times, such as the 1997 Asian financial crisis. Although the company's story of rise, fall, and rise again is remarkable, it should also serve as a cautionary tale for other corporations in Indonesia and across the world. What is your key takeaway from Asia Pulp Paper's rise and fall? Comment your thoughts below. Thank you so much for watching. If you haven't already, hit the like button, Subscribe to the channel and turn on notifications to stay up to date with our latest uploads.